and efficiency in the middle of the market. So in the equity markets right now, if you place a market order, a retail market order, 95% do not go to the lit exchanges, do not go to NASDAQ or New York Stock Exchange. They go to wholesalers, and they don't have order by order competition. And part of that is because of what you just said, payment for order flow, which is, yes, it's banned in the UK and in Canada and Australia. The European Union, through something called ESMA, is looking at that right now. And so I think it's natural that we look to say, how do we drive greater competition and efficiency of this market, and use the tools that Congress have given us?
But are you keeping open the possibility, the option at least, of banning it altogether? And if so, when will you make a decision whether you'll do that or not?
Well, it would be a decision for the 5-member commission. We would put it out to notice and comment so the public gets to weigh in. We benefit from the public's view, from the investor side, the issuer side. To basically, a lot of our market right now is dark. It's not in the lit markets, David. It's dark and going to wholesalers, and how we get more transparency and competition in the market. So each feature is on the table, whether it's something called the minimum increment or tick size, or the national best bid, best offer, and how the order routing works. And yes, that includes not just payment for order flow, but possibly what's called exchange rebates. So it all fits together, and we haven't served up a recommendation to the commission yet. And the commission, if they supported it, would put it out to public comment.
Do you have an estimate or a guess on when you might serve it up to the commission?
David, I learned long ago not to sort of do that. I have occasionally, and it's about trying to get the economics and the law and the policy right, get it in front of a commission. If so, get it out to the public. So I understand the question, but I'll beg off for a moment.
I learned long ago to expect that answer, but nonetheless to ask the question. You never know.
No, you're doing your job. I'm trying to do my job.
Might get an answer. A lot of us really focused a lot on the payment for overflow when we had the Robinhood situation with those meme stocks, which I think we've just passed the 1-year anniversary of. At the time, I know this commission was looking into the possibility that there was some wrongdoing. Have you drawn a conclusion? The fact that we haven't seen enforcement action, does that suggest that maybe there wasn't any wrongdoing?
Well, again, for the public, in the job I'm in, I'm also a chair of a commission, and sometimes has to vote on these various enforcement actions. So I can't get into any one matter or prejudge anything. But there was 4 matters of policy, not enforcement, but policy, that we noted, and the staff did a staff report. And one of them we're going to take up next week, actually, in an open commission meeting, is about the plumbing of the stock market, what's called clearing and settling, and how we can take some risk out of the system. And also last year, the retail public found that they were foreclosed from trading, that a number of brokerage apps said, nope, it was a fateful Friday, and they said you couldn't buy any more of this stock or that stock. So we're trying to address the plumbing and put a proposal out next week. We'll also, I think, hopefully be taking up what's called digital engagement practices, what some people call gamification, and what to do there. And as you've and I've been talking about, the actual market structure itself. So there's 3 or 4 projects that we have here, and next week we're going to put our first proposal, hopefully, in front of the public.